Good morning and thanks so much for tuning in. You're watching Trade Talk on BK Prime. My name is Alex Matthew and with me is Hiral Daria. Morning, Hiral.
Good morning, Alex.
We're back after the midweek market holiday and wish all of you, of course, a very happy Independence Day. Of course, we had a lot of coverage on Independence Day, including Prime Minister Modi's speech where he spoke about the next 5 years and promised incredible development. And that's important in the context of what you're seeing across the world. You're seeing growth slow down in China. You're seeing potential for growth slowdown in the US as well, but particularly China is weighing down on markets globally right
Absolutely. And if you see in terms of US markets as well, we are talking of downgrades that are coming in. Now, the buzz with regards to Fitch looking at downgrading other banks. So I think there is some bit of negativity across, but I think India is still somewhere standing strong like a pillar.
No, certainly. Bastion of strength, to say the least, because similar cues is what you saw at the start of the week. Global cues were muted, Asian markets were down, and through the session you saw selling in the Indian equity markets, but towards the end, what a recovery. And you ended in the green for the benchmark indices.
Absolutely, and clearly that was the short covering which actually led us to this kind of recovery, Alex, in terms of markets as well. Because if you see with Nifty, it's actually taking support at its 50 DMA as well. And what's coming out of the wash is right now that it's IT and FMCG. Now, both these sectors actually saw profit booking. Again, you're seeing buying interest that's coming in both these counters. Apart from that, weakness continues with regards to metal names, if you see from a Monday session perspective. Yeah. So the metal index was the top losing sector as well. Now, talking about Nifty, strong support seen at 19,250 to around 19,300 kind of a zone. And the highest OI has been observed on the call side has been observed at 19,600, which is then followed by 19,700. Whereas on the put side, the highest open interest build up is at 19,300 strike. Now, in case Nifty goes below the 19,250 mark, there is expected to be further selling pressure. So that mark is going to be absolutely crucial for us to watch out for in today's session as well. Because what happens is US markets, as you were mentioning, yesterday's session, we did see good amount of selling that did come in.
All of them losing a percent,
absolutely.
More than a percent.
So if that continues to impact our markets in today's session, and if we slip below the 19,250 mark, there could be absolute selling pressure, which could take us to even 19,000 levels. So that's going to be crucial for us to watch out for. Bank Nifty has been interesting again. Support is coming in at 43,700 to 43,900 in terms of Bank Nifty. But clearly, the kind of participation that is needed is still missing. And it's the PSU banks which are outperforming the private sector banks, right? So that's an interesting fact we need to watch out for. And anyways, I think today you will have the FOMC minutes that will be released as well. So interesting points that we should be noting from the financial side of it.
And that's essentially what the attention turns to, because earnings season is done and dusted for the first quarter. Of course, there are a lot of AGMs that will come in. Reliance Industries AGM for one is going to be a big one to watch. And generally, you've seen in the run up to the AGM, you've seen the stock price move up. We'll have to see how big a factor that plays. In recent conversations with the likes of, we've had several technical experts talk about Reliance Industries and the fact that it could have a bearing on when the benchmark goes in the near term at least. But for now, let's turn attention, Hiral, to a few stocks that are going to be in focus. You mentioned the FMCG pack. And of course, within that pack, ITC is going to be one to watch in particular. Of course, the Q1 results came in and the revenue and the PAT number were both ahead of consensus estimates. Cesar is joining in to give us some clarity on what exactly panned out and what didn't work for ITC in the quarter gone by. Morning, Cesar. What do you have for us?
Right. Morning, Alex. So ITC has reported a strong set of numbers, with Jefferies terming their performance as truly fast moving at a time when most consumer good companies have reported a modest growth. So the company has reported a 16% increase in net profit, beating estimates. Revenue dipped 6% and this was on account of the agri business, which has faced some setbacks on account of the restrictions on wheat exports. While the paper segment was also affected by weak demand, competition from China, and decline in the global pulp prices. So ITC's revenue from agribusiness fell 24%, but excluding the wheat exports, revenue grew 31%, which was quite strong. Now, as far as the other segments are concerned, sales from cigarette business grew 11%, with underlying volume growth estimated at 8%. FMCG quarterly revenue grew 16% to cross the 5,000 crore mark. This was for the first time ever. In hotels, revenue grew 7.6%. This was slightly lower than analyst estimates. The management attributed this to lower occupancy due to fewer wedding dates in the first quarter. Nonetheless, the hotel segment's margin expanded 140 basis points to 33.9% on the back of higher revenue per available room. The board of ITC has also approved the hotel demerger. So with share entitlement ratio of 10:1 for the demerged entity, wherein for every 10 shares of ITC, shareholders will get one share of the new entity. Now, analysts see this as a positive move for keeping the share prices considerable. The demerger process will take about 15 months to complete, and ITC Hotels will likely be listed by November 2024, subject to regulatory approvals.
Thanks, Isa, for getting us the details. So that's with regards to ITC. In fact, two brokerage reports, Jefferies on ITC, who's maintained a buy on the counter, and they have a target price of 530 rupees per share. What they indicate is that the stock continues to offer value and provides high earnings visibility. Apart from that, the hotel segment revenues, the EBIT has been a miss mainly on the back of lower occupancy. And you have a Morgan Stanley, which has maintained an overweight on the counter, and they have increased the target price to 493 from a 474 earlier. And overall, so good traction coming in with regards to ITC. Let's see how the stock reacts in trade today. But moving on and staying with the earnings, from the telecom space, you have Vodafone Idea, which reported numbers as well. Clearly, if you go to see, the losses have widened for the company. Now, where it stands and whether it actually will continue to be a part of the sector or not is something we need to wait and watch. But Tushar is standing by to get us more in terms of how the numbers have been. Good morning, Tushar. What do you have for us in terms of Vodafone? Tushar, we are unable to hear you. You're on mute, I guess. If you can kindly check that for us.
Hi. So sorry. Hi, Hiral. So yes, net loss for the company has widened in the June quarter, but there's one bright spot that is there for Vodafone Idea, that is its average revenue per user. That's actually risen 3% sequentially to 139 rupees per user. What is interesting here again for Vodafone Idea is that its 4G subscriber base is continuing to rise. It was about 123 million in April-June, and 122.6 million in the January-March quarter. A marginal increase, but given the situation where Vodafone Idea is, it's noteworthy. However, the overall subscriber base has dipped, which indicates that the churn continues to be there. What again is more interesting is that Vodafone has received a funding assurance of rupees 2,000 crore from its promoter group entity, as well as it has sought to pay rupees 1,680 crore in a so-called grace period towards spectrum liabilities, which effectively means that while funding or fundraising is still some time away, it's still keeping its head afloat because of the 4G subscribers.
Right. No, thanks so much, Tushar, for that. But do stay with us. We'll circle back to you some significant developments for the frontline IT companies as well. But let's round up the last leg of the earnings. We mentioned that the earnings season is over, but several companies reporting their Q1 results post-market hours on Monday. And Varsha is standing by to tell you some of those key details. Morning, Varsha. What's on your list today?
Yeah, so there are a bunch of earnings and I'll really miss this season. So the first company that we have is Aster DM Healthcare. Now the revenue was up almost 20%, but the PAT was down almost 92%. Now the reason in degrowth in PAT is mainly on account of losses from new hospitals because of the higher depreciation and the increase in the interest on lease liability. Also due to non-recurring exceptional items. Excluding new hospitals and non-recurring exceptional items, net profit after tax grew almost 87%. Also, if you see the India revenues were up 29%, EBITDA grew 47%, while the GCC revenue was up 18% and EBITDA grew 27%. The next company that we have is Ahluwalia Contracts. Now, the revenue was up 25%, and if you see, the EBITDA was up almost 36%. And the unexecuted order book for this company is really interesting, of almost 8,162 crores. The next company that we have is Astra Microwave. Revenue was down almost 17%, and EBITDA was down almost 86%. Now, the revenue was close to the guidance for Q1 FY24 given in the previous quarter. Also, the reduced top line is mainly on account from lower domestic business in this quarter. That resulted in inflated export contribution in percentage terms, and also resulted in overall lower margin. The next company that we have is Garware Technical Fibers. Now, the revenue was up almost 6%, but if you see, the PAT was up 52%. Now, the PBT margins have recovered from 17%, and a company looks to maintain those going forward. Also, the last year, that is Q1 of FY23, was not that good, and so this year has started with strong recovery. Also, aquaculture business has remained strong during this quarter, and geosynthesis business also continued its excellent growth momentum. The next company that we have is GMR Airports Infrastructure. The revenue was up almost 40% due to strong growth in traffic. And if you see, the EBITDA was up almost 77%. The PAT was almost 16 crore versus net loss of 112 crore. Now, there was this merger around, so there's steady progress on the merger of GMR Airports with GMR Airports Infrastructure Limited. The next company that we have is Hindustan Copper. Revenue was up almost 6%, while EBITDA was down 27% due to increase in expenses. This affected margins, which was at 24% versus 36% last year. And also, because of this, the net profit was down almost 17%. The next company that we have is KNR Constructions. The revenue was flat of almost 981 crore versus 980 crore last year, and EBITDA was up almost 2%, while margins were at 21% versus the margins were also the same as compared to last year. The order book for this company is almost 6,265 crore. The next company that we have is Easy Trip Planners. Now, there was good uptick in revenue of 41%, but if you see, then the EBITDA was down almost 16% due to increase in their employee cost, and due to this, the PAT was also down almost 21%. The next company that we have is Swan Energy. Now, revenue was actually over 200%, while EBITDA was up 43 times, and margins were at 29% versus 2% last year. Now, the main reason, the peg of this company is that the cost of material, which was 90% last year, reduced to almost 67% this year, resulting in huge uptick in margins. The last company for today we have is Gensol Engineering. Now, there was good uptick in revenue of 41%. EBITDA was up almost 142%, while if you see, the net profit was up only 2% because of increase in depreciation and interest costs. Now, why? Because this company is entering into EV business. So this is gonna be huge uptick in revenue for this company. Also, for this, the Gensol EV has bag almost 115 crore deal for providing electric cars to Odisha Renewable Energy Development Agency.
All right. So thanks so much, Harsha, for all those updates. And you're going to miss the earnings season.
Yeah.
Don't worry. We'll get you lots of work to do in the interim before the next earnings season.
Absolutely. Right? But from the list that you mentioned, Gabriel as well as Swan Energy and Hindustan Copper, these three really stand out off the list. So watch out for them pretty closely. But moving on, from the earnings season, a lot of other stocks that are in focus. It's interesting to see how the IT pack has been moving in terms of where the deal wins are concerned, from an Infosys to a TCS to a HCL. In fact, we have Tushar who's back with us to get us more in terms of the recent deal win that has come in the hands of Infosys as well as HCL. Tushar, over to you.
Thank you, Hiral, once again. Now, this is very interesting what has panned out in the last week or so. We have seen two large deals coming in, especially when in the first quarter, all the companies talked about delayed deal making. These deals are both multi-billion-dollar deals. Let's talk about Infosys, the most recent one. Infosys has won a $1.5 billion euro contract from a telecom group, a Europe-based telecom group called Liberty Group, for a period of 5 years, where it will will take care of the build and operations of this company. This can be extended up to 8 years and for a total contract value of up to 2.3 billion euros. This comes very close to I think HCL Tech's deal, which with Verizon in the US, again a telecom deal. What's interesting, however, is the time period of these deals. These are into multiple years, about 5 years for both of them, for both Infosys and HCL Tech. So what we are still not hearing is the number of discretionary deals that are coming in. We are seeing the long-term deals that are going to come in because, say, for example, both the telecom deals that these companies have struck, but the pain point of the short-term discretionary spending, where we have that SMAP conversion into revenue, that is still getting delayed. Still, there is a saving grace. HCL Tech has won a deal from Cricket Australia for its digital transformation, which will implement automation analytics to deliver a digital experience for Cricket Australia's users, fans, employees, etc. So, interesting bit here. But what we have to take it is with a pinch of salt, or we have to look into read between the lines, because these are not discretionary spending. These will not convert into revenue immediately. They are over a period of 5 years or so. Back to you here.
And very good points there. Tushar, thanks so much for bringing us those updates. But as Hiral pointed out at the start, of course, IT has been seeing a lot of buzz in the recent past, along with FMCG. And certainly for Infosys as well as HCL Tech, this is going to be a shot in the arm that could see stock prices move up in trade today. Now, another stock that is going to be in focus in trade today is going to be ZEE Entertainment. And this is because the SEBI has essentially confirmed its order that bars the ZEE promoters Subhash Chandra as well as Puneet Goenka from the company boards. To give us all of the context and the implications of this, we've got Sayaja joining in. Good morning, Sayaja. What can you tell us about this latest development?
Good morning, Alex. So basically, in a confirmatory order issued in the matter of ZEE Entertainments, the Securities and Exchange Board of India has barred ZEE promoters Subhash Chandra as well as Puneet Goenka from company boards. They're basically barred from holding positions in 4 ZEE entities: ZEE Entertainment, ZEE Media Corporation, ZEE Studios, as well as ZEE Akash News, or any other entity that may come out of the merger. So this should be seen in the background of NCLT approval for the ZEE Sony merger. So according to the regulator, the letter of comfort, which was in question in the interim order, issued by Chandra for the loans availed by the ZEE associate entities, they were issued not in a personal capacity, but as the chairman of ZEE, the regulator has found. So this, when done without the approval of these company boards, is in violation of the SEBI listing regulation. So a detailed probe, therefore, would be conducted into this matter within 8 months. So earlier on June 12, the market regulator had barred the father's son duo for the same offence. However, the present order modifies the interim order by limiting the barring only to 4 ZEE entities. Earlier, they were barred from holding key positions in all listed entities. So the matter, as I said, relates to a letter of comfort issued by Subhash Chandra while he was the chairman of ZEE Entertainment. He issued a letter of comfort to Yes Bank saying that, they can appropriate a 200 crore fixed deposit with the bank for the loans that were availed by the ZEE associate entities. Later, while being probed about this, the company made false representations saying that, that the money was returned to them, when eventually it was found that all this money originated from ZEE only. So Goenka and Chandra had appealed against this interim order. However, the appeal court, the Securities Appellate Tribunal, upheld the SEBI order and had directed the regulator to pass an order within 2 weeks of the hearing. So the order now confirms the earlier interim order, barring both Chandra as well as Goenka from the company boards. Thank you, Alex.
Right. Thanks, Aja, for getting us the details. So ZEE Entertainment, as well as the other listed ZEE companies, will be in focus as well. Let's see how they react in trade. I mean, usually the reaction is already come through so far, but if there could be anything, we'll watch out for ZEE Learn, ZEE Entertainment, and all the other listed companies as well. But moving on, one stock from the aviation company that will be in focus in today's session is IndiGo, as well as a couple of blocks that have happened on other names as well. Himansh is standing by to get us more details. Himansh, what do you have for us?
Hi. So Interglobe Aviation just came out with this information about the bulk deal where the founder Rakesh Gangwal and Shobha Gangwal are offering up to 1.56 crore shares, which represents 4% of the total shares outstanding of the company. The block deal is valued at 450 million approximately US dollars. and the shares are offered at 2,400 apiece, which represents a discount of about 5.8% to the previous close. The 100% secondary shares also have a lock-off period of 150 days, applicable for the promoters and the Chinkapu Family Trust. During this period, they cannot sell or transfer their shares in the market. However, there are certain exceptions that are outlined in the term sheet, including a carve-out for Dr. Asha Mukherjee, who is allowed to sell her 0.23% shares if need be. Additionally, there's also a special provision for the vendors to sell their shares to a single investor or investor group in a negotiated transaction, provided the sale meets certain conditions. In summary, the lockup period helps to ensure stability in the market by preventing large shareholders from flooding the market with their shares. But if you look back in June, shares of Interglobe Aviation fell over 3% when reports of their founder planning to sell about 8% in the company were floating. However, the company did clarify that it had not received any information about the same. And if you look further back in February, shareholder Shobha Gangwal sold as much as 5.1% in a block sale to raise about 350 odd million. The shares were sold through an accelerated book building offer, but yet they represented a 5% discount to the previous close. Now, moving on to the couple other bulk deals in the pipeline, you have JSW Energy, where Autumn Investment and Infrastructure sold 1.6 crore shares, and GQG Partners, on the other hand, bought 1.2 crore shares apiece at rupees 365. And then lastly, we have Ujjivan Small Financial Services, where Newquest Asia has sold 2.4% stake at rupees 495, and BNP Paribas has bought 0.5% stake, and Abacus Engineering Emerging Opportunities Fund has bought a 0.9% stake for rupees 495 apiece. So those are the bulk deals to watch out for, and let's see how the stocks react in market.
No, certainly. Thank you so much, Hemant, for those updates. Interesting on Interglobe Aviation as well. From a business perspective, of course, broadly things are looking good on the market share side. But the fine print was interesting to watch in the earnings as well. By the way, in case you missed it, over 60% of the market is now controlled by Interglobe Aviation because of the troubles that Go Air went into. Let's turn to another few stocks that are in the news on account of notifications that were sent to the stock exchanges. And we've got Rishi back with us. Rishi, good morning. What do you have on your list today?
So firstly, we have Hero MotoCorp. The Sunil Kant Munjal, who was the joint MD, has resigned. And now they have also disclosed the promoter family's settlement that was signed in 2016. Now, the management and control is expected to remain with the family group comprising of Santosh Munjal, Renu Munjal, Suman Kant Munjal, and Pawan Munjal. Now, an understanding has also been reached between the family as well as Sunil Kant Munjal regarding usage of the Hero trademark. Now, we have Reliance Industries, particularly Jio, which has completed the minimum 5G rollout obligations much ahead of schedule. Now, and this is across all spectrum bands that were acquired in the 2022 auction. Now, these spectrums offer about a speed of up to 2 Gbps, which is much higher than what we get right now. Some enterprises, including banks, educational hubs, hospitals, and government establishments, are also connected to this network already as per Jio. Then we have Quint Digital Media, which has signed MOU with the Adani Group subsidiary, which is AMG Media Networks, to sell the remaining 51% stake in Quintillion Business Media. Now, post-acquisition, QBML will become a wholly owned subsidiary of the Adani Group. Now, please note that QBM is the owner of BQ Prime. We have VIP Industries, whose MD resigned, who is Ananya Datta. Now, Neetu Kashiramka, who has been appointed as the MD designate and CFO. She has also been the CFO of the company since April 2020. We have Suzlon Energy, which has raised 2,000 crore via QIP at price of 17.5 apiece, which is at a 4.8% discount to the floor price. Now, more than 5% of the equity shares that were allotted were to very well-known investors, including BNP Paribas, Bandhan Mutual Fund, HDFC Mutual Fund, etc. Then we have SGVN, which signed a 7,000 crore deal with the Punjab State Power Corp for 1,200 megawatt solar projects. Then we also have Tejas Networks today morning, which announced that it has bagged an order from TCS for about 7,500 crores for BSNL's 4G and 5G networks. Now, under this deal, it will provide support supply, support, and also maintain the radio access network equipment for BSNL.
Right. These are interesting ones. SJVN really stands out of the lot as well as the Tejas network because SJVN has been in a spree of getting orders.
And the stock prices
Absolutely has run up quite a lot. And I mean, the management is also absolutely confident with the kind of capacity addition that they're looking at. Execution is expected to remain strong. So watch out for these names pretty closely. Thank you, Rishi, for getting us the details. So that's all the action in terms of where the secondary markets are concerned. But one company that will be in focus in the primary market is a Cello. I mean, Alex, I'm sure you remember exactly a household name for all of us as well. I think since school we've been carrying, I mean, bottles, different boxes, all of that, right?
Did you use the ball pen Cello gripper?
Correct. Yeah. I mean, but I think that I don't know if that's the same company or not.
I think it is.
Yeah. So Cello is going to be in focus. We'll find out more from Saloni, who's standing by to get us more. Saloni, what's in store with the Cello?
And also is the ballpoint pen Cello product.
Yes, it is.
Okay, there you go.
So, yeah, the household products and stationery maker Cello World has filed for an initial public offering with SEBI. So, the company's founders and shareholders seek to raise rupees 1,750 crore via an offer for sale. There is no fresh equity that will be issued during the IPO. So, the promoters of the company, Pradeep Rathod, Pankaj Rathod, and Gaurav Rathod, plan to offer shares worth rupees 1,350 crores in the IPO. And the other shareholders, including Sangeeta Rathod, Babita Rathod, and Ruchi Rathod, will sell shares worth rupees 400 crores. Kotak Mahindra Capital, ICICI Securities, IIFL Securities, JM Financials, and Motilal Oswal are the lead managers to this issue. So the company will not receive any proceeds from the offer, and all offer proceeds will be received by the respective selling shareholders in proportion to the equity shares offered by them in the offer for sale.
Okay, so there you go. That's the latest development on Cello. It's an offer for sale, remember, no fresh issue of equity. Thank you, Saloni, for that update. And that brings us to the end of this edition of Trade Talk. We've covered quite a lot of ground, but like we said, the setup is a little bit muted based on what we're seeing across the globe. So let's see how that pans out through the day. You'll find all the live market action and everything else that you need to know on BQ Prime. So do stay tuned.